Costs are going up at Facebook, leading to new growth concerns. The CFO explained why on the conference call last night.
Factors driving this deceleration include the maturity of our business, as well as the increasing impact from global privacy regulation and other ad targeting related headwinds. While we have experienced some modest impact from these headwinds to date, the majority of the impact lies in front of us.
And that is pressuring the stock ahead of the open after hitting a 52-week high yesterday during the trading session. Joining us right now to talk more about Facebook's earnings, Ron Josie, who is managing director at JMP Securities. And Ron, thanks for being here.
Great. Thanks for having me, Becky.
Is the street overreacting to concerns about higher expenses to come?
I mean, that's a good question. I mean, the big issue coming out of earnings is not necessarily the decel that happened in 4Q that I thought in advertising, that I thought was a little bit surprising. It's as we just heard, you know, the impact to revenue growth and advertising revenue growth to come, due in part to three main things between continued privacy regulations, some targeting changes in mobile OS and browsers, and then internal Facebook settings. And when you put all that together, it creates some concern going forward. But frankly, when you take a step back and you realize that Facebook has 8 million advertisers, multiple new products that are coming out from a monetization perspective, and newer businesses around payments, I think there's a lot of opportunity ahead. Just for now, it's understandable why the stock is down, just given those concerns. However, taking a step back with those 2.3 billion users, there's a lot of good things going on at Facebook, too.
Yeah, they released some new metrics yesterday, too. Actually gave the revenue per user lines, not only for Facebook, but for its other apps as well, like WhatsApp and Instagram. Instagram told you a little bit about those things. I saw a lot of different takes on that. I guess for Facebook, the app, it's $8.52 per user that they've got, and it's a little bit lower if you look at the entire family of apps. It's $7.38 per user.
Sure.
That I saw some people looking at that saying, hey, it's a one-trick pony. I think of that a little differently. It seems to me like Facebook is still hanging in there, the Facebook app, and it's getting some strength from these other apps as well. How do you read it?
No, I completely agree. I mean, I think it's pretty fascinating that, you know, the Blue app, the core Facebook app, is still seeing pretty good growth and driving a lot of growth in overall advertising. But frankly, advertising, let's think about it. Advertising on Instagram just started several years ago. Stories is a brand new, not brand new, call it 3-year-old product in terms of monetization, is literally just now getting to a level where you have scale in terms of 4 million users. And frankly, from a WhatsApp and even Messenger perspective, still very early days of monetization. So, you know, when you put all that together, the fact that Big Blue, or the core Facebook app, is doing so well, I think that's fascinating. And going back to prior comments, that's the opportunity with Messenger, Instagram, and WhatsApp on the come, with lots of opportunities going forward.
Ron, we heard the CFO say, you know, a lot of the issues pressuring margins are not really through. I thought that maybe perhaps Wall Street was thinking that they've taken their hit. There's been this managed ramp in expenses. Profit margins last quarter went down to 42% from 46% the year earlier. Where do you think they settle out at?
Yeah, I mean, look, I think the company is guided longer term to call it mid 30% operating margins going forward. However, frankly, these numbers on the profitability side were better than what we expected. We thought costs would be higher, and you know, the company in 3Q came out and gave their guidance for full year operating expenses for 2020. And when you think about that guidance relative to what they just reported, you know, I actually think it's a big possibility they'll be coming at the lower end of those expectations. So from a revenue perspective, you know, numbers come down slightly, just given what we just talked about with Becky. From a profitability perspective, you know, it seems as if it'd be hard for Facebook to actually spend at the high end of their overall guidance. So I actually come out of the quarter feeling a lot better about overall profitability, believe it or not.
You already had an outperform on the stock and a $250 price target. That's a 12-month price target?
Yes.
Is there anything you heard on the conference call or saw in this report that gives you pause or makes you reconsider any of that?
Well, I think the new information around privacy regulations, you know, potential targeting issues with mobile OS and browsers and Facebook products that could impact overall advertising growth this year. I think that's one thing that's just going to be a cause of debate going forward. But what we've known about this company for the past several years is there's going to be some conservatism in commentary. And frankly, again, with 8 million advertisers and the traffic and the engagement that we're seeing and the opportunity around payments and others, there's a long runway ahead in terms of what they can do. So I understand the pause and I understand what the stock's doing this morning. However, we would look at this as an opportunity to be buying.